We have Andrew Holland, Chief Executive Officer at Avendus Capital Public Markets Alternate Strategies. Andrew, great to have you with us here. Thank you very much for your time. I mean, you know, if it's momentum that that one is chasing, I mean, then you got to do it to the exclusion of everything else, because you can't mix things up. You know, a little bit of fundamentals, a little bit of momentum. That won't work. You either go with the simple price action, which is momentum, or you look at fundamentals. Is there a way to marry the two, in your opinion, in terms of what you're seeing out there on the screen, Andrew?
There is actually, but you know, I think what you have to do is you know, if you take in any sector, you know which companies you believe are going to do well within their own sector, and therefore, if you get that earnings surprise, which you've been seeing, you know, either on the positive or negative side, that's what's going to be the share prices, because you know thereafter. So you got the fundamentals right, you got the right company, it's doing well, it's going to exceed the analyst expectations, which means that the analysts then have to upgrade their forecasts or downgrade, whichever it would be. And the market's, you know, both rewarding and punishing those companies, you know, where the fundamentals have not played out as strongly. So you get that extra momentum in that. One, the analyst is going to upgrade the share price along with the earnings. So the first point is you get that let's just say a company's earnings forecasts are increased by 10%, you get that initial pop of 10%, and then of course you go above that because the momentum of the stock is going to take you much higher than the analyst forecasts, who then the market would believe could also be conservative at that point.
Okay, well, the space to be in this morning undoubtedly is insurance. Just look at all the stocks. GIC is up about 9%. New India Assurance is up almost 12% right now. LIC is up about 4% odd. So this space is really buzzing. Don't lose sight of that. Huge volumes as well. And Yes Bank is the other one, by the way. 7% higher, massive volumes on Yes Bank. A big comeback, actually, for Yes Bank this year. This year, it's up almost 50% already, and we're not even done with the 2 months of the year. So that's a big comeback there. But Andrew, hi, good morning. There are many things to watch out for, right? There is, of course, the RBI policy today. There could be a dovish tone there. There's the election season that we're getting into. So momentum is very strong in the market. Is there any caution that you're expecting to hit the system, or do you think that this could be a clean runway on the upside?
Yeah, clean runway is always always fraught with danger to my mind. But listen, you know, the RBI. Let's start with the RBI. You know, the budget, to my mind, apart from the normal, you know, expenditure by the government, it was very bond dovish in terms of you know, the government borrowings, you know, being lower. And of course, we've got the bond inclusion in JP Morgan's indices coming up as well. So that tells me that bond yields will probably fall below 7% very quickly. So with the RBI, what would they do? I mean, they're not going to be over hawkish, right? Because you've got a Federal Reserve which has done a pivot. I suppose where I'd be looking for in this policy is how they're going to accommodate some of the tight liquidity. Maybe there's a CRR cut. You know, to help banks through the fact that, you know, it is, you know, borrowings are quite high at the moment, and because the government's got a lot of cash. So that's what I would look for. If that happens, then the banking sector might breathe a huge sigh of relief, and we could see that being the next kind of leg for the market, because the banks have been underperforming quite considerably for the last 6 to 9 months. So this at least would be some rally for them, or relief for them in the very short term. But otherwise, if it's not, then I think the banks remained under pressure.
All right. Hi, Andrew. Good morning. Good to see you. And Andrew, I think in the past you've been quite positive on the travel and the entertainment space. In fact, we had the management of TTK Prestige who joined us yesterday. They said the share of wallet, you know, he's not seeing so much of traction on his sales because he believes a larger chunk is moving towards travel. And there are a lot of stocks out there that are doing well. I had a chat with one management yesterday as well, who, you know, we'll be presenting it on the channel later on. But what's your view now? These stocks have run up. Still more headroom?
Yeah, no, I think so. I don't think travel is going to be something which people are going to, you know, delay at all. I mean, I think if anything, it's more travel that you're seeing. If you speak to all the hotel companies, you know, margins are improving. We've got some new listings coming as well. So again, that will give us some flavor on what they're saying. But I think overall, when you get to this, 2,500 per capita GDP, then people start spending more money. And I think after COVID anyway, there's a trend. So I don't see that going away without the very start of a long runway for the hospitality industry. And I was at a wedding at Sula over the weekend, and they were saying that at the recent holiday, they had over 2,000, 5,000 people again visit just for the day. So travel, experiences. It's going to be something that's going to stay with us for a number of years.
And I think even there, right, travel, we were earlier talking, before you came on, Andrew, we were talking about the push from for the PSUs from Prime Minister Modi. Although I don't think he also would have expected this kind of rally, but he took stock of the big gains in PSU stocks and travel, tourism. I think with, of course, what has happened in Ayodhya with the Ram Mandir, or, for example, I think he made a sort of a comment about get married in India. I mean, as a theme, as something which people should consider instead of spending money abroad, overseas, and destination weddings, etc. Choose destinations here in India. It's a very powerful kind of theme that he's picked on, because it's a huge expenditure annually. I mean, the entire wedding industry. And that, of course, spurs everything, the entire ecosystem, which is, hotel accommodation, travel, etc. So take your point there. Any specific trades, Andrew, that you want to talk about in terms of what can work from here tactically?
So I just want to highlight this, that the bumps along the runway, which Sonia had mentioned, is that, I'm seeing a lot more noise coming from the commercial real estate in the US. You saw it with a regional bank, you saw it with a Japanese company, financial company having problems with properties. And I saw, a REIT company again halving its dividend. So I think just be careful on the commercial real estate in the US. That has the potential to kind of bring markets down if that was to be the case. I mean, we see what's happening in China in terms of their property. So I think it's something that could kind of stall the kind of strong rally we've seen. But that said, I mean, what are we doing in India? Basically, we're kind of not avoiding the banks, but we're being very cautious on the banks. Whereas we'll wait to see what the RBI does today. But the favoured sectors, remain a little bit more towards IT, metals, because we do expect China will do some stimulus to get the property market stabilised, and that will be good for the metal industry overall, on metal stocks. And that's really about it. Whenever I look at kind of new names, Prashant, I just look at the share price, and they've all run up so much, and it's just I just feel a bit wary kind of chasing markets. I know the momentum's there, and you keep with it, but chasing new stocks or new avenues of growth is I think a little bit fraught with danger at this point.
All right, chasing new stocks is fraught with danger. Got it. There doesn't seem to be any danger in the market, though. The mid-cap index is up 350 points, but I take your point. I mean, it's better to just, exhibit some caution at higher levels, especially when anything and everything is rallying. So that's something to be a bit cautious about. But let's do